Before I invite up the panelists, allow me to call on stage the moderator for this session, my colleague Pooja Jain, special correspondent with Times Network. Pooja, can we have you on stage, please? I'd now like to invite up on stage her panelists. We have Radha Kirthivasan, the head listing and SME at BSE. We have Vivek Gambhir, venture partner, Lightspeed India. Padmaja Ruparel, co-founder, IAN Group. And Anisha Singh, founder, She Capital.
All right. Thank you, Sumit. Now, first of all, at the Times Network, we very much subscribe to the philosophy that the country's most promising entrepreneurs and small businesses are not limited to the major metros. They come from all corners of the country. So looking at this room of winners and finalists for Season 12 of the Leaders of Tomorrow Awards is very heartening. A huge congratulations to yourselves. And we very much not only, celebrate your triumphs, but we salute the trials that you've been through as, small business entrepreneurs. And speaking of trials, this next conversation is dedicated to just that. Because small businesses, if you walk down memory lane for a moment, have been down a rough road. I think demonetization came first, followed by the implementation of GST, of course, then the global economic downturn, then the crisis that we know as COVID-19, and most recently, geopolitical tensions are, of course, on the rise. But against this very backdrop, our small businesses have demonstrated remarkable resilience. Yet raising capital continues to be a challenge that looms large, even in the eye of a fiscal and a digital and an industrial revolution. So where do the answers lie? Well, our highly distinguished panel of domain experts is here to tackle that very topic. All right, and with that, let's kick off the conversation. And Vivek, if I could start with you. And sir, I think there's some merit to putting facts and figures to the conversation. So for the benefit of our viewers and our audience, how many startup proposals have you reviewed in the last year? And of the number that you reviewed, what percentage actually went on to reach a term sheet stage of conversation? Let's hear it. Fact from fiction, sir.
Thank you, Pooja. Wonderful being part of this panel. And certainly I was thinking, I'm the only man in a panel of 4 women, and then I realized this is how women leaders feel every day of life.
Vivek, it was so refreshing. Usually they turn to me as a token female on show Padmaja and say, why don't you get it started? Right. So I love that.
So I'm the token man here in this panel, and for once I feel very good.
Sir, we even call them manels. When they're all male panels, they become manels.
Yes, I feel very privileged to be the token man here. So thank you for having me here.
Absolutely.
Pooja. Typically, if I look at the data for a company like Lightspeed, and we don't necessarily look in terms of proposals. What we look in terms of is, say, the number of founders that one is meeting every year.
Fair enough.
And typically, the firm would end up meeting about, say, 2,000 or so first founder conversations. That typically translates to about 12 to 15 deals a year. So it's actually, the funnel starts very broad, but it gets extremely, extremely selective in terms of the number of conversations which lead to follow-on conversations, which lead to ultimately term sheets and finally funding.
Fair enough. And thank you for being very candid in that answer. And of course, while we will get to the challenges that, small businesses face, one of the challenge that, all of us here on the panel face is you have that fiduciary duty of investing in those companies that have the most reasonable chance of success and sustainability. So I'd love to hear from the women on this panel as to which sectors you consider to be sunrise sectors, perhaps, and on which sectors has the sun finally set. I'll start with you, Radha.
Basically, we see a lot of momentum in the solar industries.
All right.
Yeah. So that's the sector, and then FMCG products and the IT-enabled units.
All right. And I'll get your views as well.
So first of all, thank you for having me here. And looks like a real successful event. So congratulations to the entire team. My answer lies in your first comment that you made in your opening comment, that we've had COVID, we've had demonetization, we've had various challenges, right? I think the way we think about it as each of the challenges is actually an opportunity, right? So if you look at demonetization, look what it created. It created the pay tech companies like Paytm and PhonePe and the rest of it, right? If you look at COVID, healthcare completely changed the way we were looking at this country, right? A lot of DIY medical devices started to become center of our life. How many of us had actually even thought about that it would happen? If you look at the current geopolitical challenge, I think it's driving India to become self-dependent on many of the sectors, be it in defense, be it in infrastructure, etc. So I think the way we look at it is look at opportunities and those are our emerging sectors. So in our group, which is IAN group, we have an angel investor group, we have a couple of VC funds, etc. We invest from literally 50 lakhs to 50 crores on the platform. I think we are looking at non-rare earth material products. We are looking at healthcare and biotech. We are also looking at cyber security. We are looking at drones and space, but we are also looking at D2C and consumer tech, etc. So I think the opportunities really sectorally are emerging and they will keep evolving. As each industry grows, like the software services industry, which is the first startup industry of the country, I think that today is not an early stage investment for us.
Fair enough. And I'll give it to you, Anisha, for your views.
I went to the US to study. And before I left, somebody said, you got to drive a car. And then I had friends who told me, well, if you can drive in India, you can drive anywhere.
Sure.
And I think that's kind of what it is with startups. I think if you can start up in India, you pretty much can start up anywhere. The reason being, there are so many things being hurled at you, a lot of which you talked about recently, that startup founders in India have become agile to an extreme speed. And I'll give you an example of this. We invest, 50% of our portco is consumer. The rest is what we call just cool, interesting tech. We'll dabble in anything, healthcare, sports tech, everything. But consumer companies, up until 4 years ago, hadn't heard of this model or, dealt with quick commerce. That has taken it and broken the mold. Indian founders have suddenly had to deal with 10-minute delivery, 8-minute delivery. And I'm not talking just food. I'm talking pretty much everybody across the board. We've got a homeware brand called Elementary, which, why would anybody need a,
emergency
cake dish and a fruit bowl in 8 minutes? But turns out that they are doing phenomenal business on quick commerce. So the Indian consumer is changing and the tastes are changing. And I realize this too, because when I'm back in the US now, once you hear, oh God, it's going to be 4 hours before it's delivered, I realize how we're changing as consumers too, right? And so the Indian startup founders are having to deal with this agility, which is going to hold them, I think, in the most brilliant way going forward. So I actually think, and I tell everybody, this is such a great time to be starting up. I've been a founder since 2004, started up in the Indian ecosystem in 2009. I'll tell you, there is no better time than 2025.
That deserves a round of applause, ladies and gentlemen. Yeah. All right. Now, as investors, I'm sure there's several metrics that you look at before signing that check, whether that's proof of concept, right? Proof of market, profitability, a fully baked management team, and the list can perhaps go on and on and on, right? But I'd love your take on what you consider to be some of the most commonly made mistakes on behalf of the entrepreneur in the capital raising process. And likewise, for the lucky few that do go on to raise that capital, what are the commonly made mistakes when it comes to spending that money? If I could start with you, sir.
Ultimately, look, the entire fundraising process is a very challenging process.
Say the least.
It's not for the faint-hearted, and obviously, you have seasoned investors here who can talk a little bit more about it. I think it's very important to know when you're raising money for the right reasons and getting the timing right. A lot of times I think entrepreneurs end up adopting a very spray and pray approach.
What do you mean by that?
So they will contact every single investor, right? Not every single investor is the right investor for your company. So I think doing a little bit of homework to figure out, ultimately it's a marriage or a partnership. Ultimately trying to figure out the right investor who truly knows your space, can add value. These are investors, not an ATM machine. So it's very important to find the right investor. The second is avoiding what I call valuation vanity, right? You end up, again, probably shooting for the perfect valuation. There could be follow-on rounds after that. So learning how to be able to price your business is a very important one. The third, particularly for SMEs, look, every startup is an SME, but not every SME is a startup.
Interesting, right.
There are some businesses which are important from a venture capital perspective. A lot of businesses are not the right ones for VC, because ultimately a venture investor will look for non-linear returns. Not every business will scale up in a non-linear fashion.
Sure, fair enough.
So before you realize about investing, it's so important to know, is this actually an investment which is appropriate for a venture investor? And then the fourth, as you were saying, is, just get the fundamental business model right. How will you make money? How will you actually beat competition? How will you sustain performance? What's the product market fit? What are the unit economics, the team? Those are more standard things. But to me, the why is so much more important than the what here. Most founders end up focusing on the what. I think it's so important to get the why right as well.
This is brilliant advice here, really brilliant and free of cost, really. And, I want to build on a point that we just heard the panel allude to, which is about SMEs. All right, because the BSC obviously offers an SME exchange platform. So SMEs now have the avenue to raise capital via the capital markets. And the overarching benefit there is, of course, the business isn't burdened by debt. But walk us through some of the finer nuances in terms of the challenges, whether with respect to cost, whether with respect to compliances or regulatory complexities.
See, I would start with telling there are around 6 crore MSMEs that has been registered on the Udyam portal. But if you see the listed entities, both exchanges put together, it's not even 0.01%. So what is it that holds them back in listing,
Right.
Basically, I feel it's a misconception or lack of awareness. Every SME company that we fear, that we start talking with, feel that it's too much of a hurdle, it's too much of disclosures is required. I cannot go that path. And one more important thing is I'll lose entire control of mine.
Right.
Yeah. So then we try to suggest, see, if you have 100% control, you have to dilute. Minimum dilution is only 25%. But your 75% gets valued only if you dilute 25%. So that's the thing that we tell the companies. Then the other concern is what will happen post-listing. I'll have to follow too many compliances again, But as regards SME, the post-listing compliances is also quite streamlined, They don't have to make half-year quarterly compliances as required. The compliances are only half-yearly. Then most of even the appointment of a woman director, that need not be an independent woman director. It's difficult to get a director. First of all, it's difficult to get a board of director, independent director on board of an SME, because nobody believes in SME, frankly speaking,
Right.
whatever it is. And to get a woman director aboard, it's more difficult. So we have a relaxed norm of not having an independent woman director. It can be a family woman who can be there. Then even the cost of listing is quite less as compared to the main board. The processing fee, the other charges are very minimal in this. So again, that is also a relaxed rank. So all these things, I think, should make the SME companies more comfortable. And then we have a dedicated team who actually handholds them right from the conception to the entire team. So I think this would help the companies to raise more money. And equity capital, we have seen companies grow in this, actually grow in this. Their turnovers grow, they get a very good visibility, their brand is built. There are a lot of good investors that are coming in the SMEs. So yeah, there are advantages, a lot of advantages we see in them.
Radha, thank you so much for sharing that. And Padmaja, I've got a follow-up question for you here, because the data seems to indicate that last year alone, right, venture capital investment, pan-India, it exceeded $17 billion in perhaps 900 plus transactions. And that marked roughly a 15% increase by deal value compared to the prior year, and roughly a 20% increase in deal volume compared to the prior year. All the while, global venture capital investment has declined. So here you've got a thriving, VC ecosystem that's homegrown against geopolitical tensions abroad, where you're seeing just the opposite. Is this a trend you expect is going to continue? Is the trend here to stay?
So a short answer, yes, honestly. And I think there are 2 or 3 points I'd like to make here. Number one, I think India is the fastest growing startup ecosystem. The numbers tell you all. Number two, I think India is genetically an entrepreneurial country.
Genetically, by birth. It's our birth lottery.
Yeah, I mean, 250 years ago, it was 25% of global GDP the country was. So there is no reason to say that has gone away. It has revived and it has kicked in big time. Third, I think the government from the budget has already doubled its outlet on a single fund, which is fund of funds, right? And we have a growing GDP. So I think those stats alone tell you that this is going to be an active and a fast-growing venture capital industry. But more importantly, it's a country where a lot of startups stroke SMEs will thrive. So it is a good time. What is important is, I think I'll echo a little bit of what Vivek said. It's very, very important to figure out how you are funding your company. Is it through revenues that you can generate from your own company? Important. Is it debt? Because there's a lot of debt getting opened up in our own companies post-investment. We've matched the amount of equity we've invested with debt, and it's a sizable check. Okay. And third, I think you should also be mentally prepared that if you're raising money, equity money, please be very, very clear on 2 things. Number one, you will be giving up some control in the company. Investors will take a minority, but they will have a majority say in your company, especially on strategic matters. So please be aware of that. And secondly, you're getting into a marriage. But unlike a marriage, investors are looking for a divorce and an alimony. So please
a round of applause
ready.
for that analogy right there.
So I think those are important, because as you grow in numbers, I think it's also important to understand how this model works. It is not going to be passive investment like a bank to say, okay, I'm going to give, which is great money, that I'm going to invest, I'm going to give you money, and I'm going to take a certain percentage as interest, and I have no say in your board. That is not going to happen. So I think we have an opportunity to really create and breed and grow and nurture very high quality companies. We have the market on which these companies will grow and thrive, but it's also important to understand these factors, and then post-investment make sure that there are governance and reporting structures, which Radha ma'am alluded to in some ways. I think it's very important to create a good, solid foundation companies which then pass the test of governance. It's extremely important to make this happen, because otherwise we will have very slippery slopes.
So I just would like to add.
Ma'am, just a moment. In fact, I hate to cut this conversation short. However, our guest of honor, our chief guest, has now joined us, is in the building. Ladies and gentlemen, if you could please put your hands together for Shri Anurag Singh Thakur, former Union Minister and Chairman of Parliamentary Standing Committee on Coal, Mines and Steel. Huge round of applause, sir. And with that, I'd love to take this conversation offline once more for Anisha, Padmaja, Radha and Vivek. Huge round of applause. It's deeply deserved. Thank you so much.
Thank you so much, Pooja. Thank you for the panelists, ladies and gentlemen. Fantastic panel. Of course, all the sessions have been so amazing. We would just love to keep the conversations going. The conversations will continue off stage as well. And of course, we have to now move on.